All right, good morning. Let's go over today's trade plan. So in the overnight session, we had resistance at 1922 to 24, and the market held below that and pulled back to our support area at 16 quarter. And so far, buyers have been active there. Basically, in the S&P over the last 2 to 3 sessions, we can see that the market has established a trading range, spending most of its time above 1914 and just balancing within a range. So for that reason, we're using 1914 to 1916 half as the micro bull bear zone. And looking at the other markets, TF has an important HVN at 1120 to 1122 that it tested in the overnight session. NQ pulled back as well, but overall is still trading within a range. So even though on these smaller time frames, yesterday was the first time that we saw some warning signs for buyers, and we saw some selling come into TF and NQ. Bigger picture, buyers can still maintain control if they can hold ES above 14 to 16 half, and if NQ can also pretty much hold here and start turning around. And ideally, we want to see NQ trading back above the 37.21 to 37.25 zone. A breakout above that area would confirm some buy-side strength in NQ. For TF, at the very minimum, we want to see it holding above 1120 to 1122. If it breaks that zone and starts liquidating below it, then that would increase the chances of the S&P breaking below 1914 and putting in a pullback down to at least 1908 to 1910 and potentially the 03 to 05 zone. So in the event that we hold 14 to 16 half here off the open and the other markets are also stable, we can get a move back up to the 2175 to 2375 initial resistance, and then right above that we have the all-time high at 24 quarter. Now going from the bottom of the range back up to the top of the range short term, we can see some selling on first test, but the buying doesn't necessarily have to shut off at the initial resistance zone. If the internals are rising and looking healthy, if the momentum is on the upside and the other markets are also showing us some strength, then ES could still break and make a new high. That's not out of the question, and that's why our bias is very neutral here. We don't want to go overly bullish or overly bearish when the market's simply bouncing in a range. So as long as the other markets hold and at least don't sell off, and ES holds 14 to 16 half, there's still potential for a rebound back up to initial resistance. It's a good spot to take profit, or at the very minimum scale out and take some profit near the highs. But if the internals are shaping up to be pretty strong, then there's still that potential that we can go higher. And keep in mind that with the prior close at 2175, the internals are probably not going to be extremely strong when it heads up there. But as long as they're trending higher and not showing any signs of real weakness, then by default we have to give edge to the buy side, and we could still break through that. So be cautious shorting that zone unless there are clear signs that the market is stalling up there, or there's some big divergence on the advanced decline, or just plain old, just clear weakness on the advanced decline. We're not going to be shorting initial resistance today. Yesterday we did short that area, but today it would be a retest of that zone. And if the other markets are quite strong too, then we could still get a break above it. Overall, buyers are still in control, so we're not looking at this move to 24 quarter as a market top. The market hasn't really shown us that yet. So on the upside, that's the idea. On the downside, if the other markets start breaking lower off the open, or if TF liquidates below 20 to 22 and the internals are quite weak, then we can still take a proactive short anticipating a break of 14, but that's really the only time it makes sense to short this market here, is if there are high odds of a break below 1914. And for that to happen, we do have to see some pretty negative internals. We have to see momentum pretty much leaning on the downside, so the tick distribution has to be negative, and the tick readings on the upside have to be quite weak. 400, 300, something like that. And the other markets have to also show some clear signs of weakness, kind of how TF did yesterday. So if we start off the day with a similar open like yesterday, where TF just liquidated right off the open, then we can still consider a proactive short, but it has to be targeting 1908 to 1910. If the internals are kind of mediocre, the other markets are kind of balancing and not really going anywhere, then we don't want to short this market near the short-term balance lows, anticipating a break if there are no signs saying that there's a break that's likely to happen. So again, the theme is that the bias is neutral. We don't want to go overly bearish too soon. By default, the uptrend is still intact. So if we are going to anticipate a move, I would still rather lean on the long side. But even for that, since we're trading in a range and we're at these elevated prices, we need to see something in the market to justify that trade, or we have to get very good trade location. Like in the overnight session, 16 quarter, was the bottom of our support zone, and that was ideal trade location for anyone buying this market. But if you bought it higher, then the market didn't really go anywhere in your favor just yet. So off the open, 14 to 16.5 key area in the S&P. We'll be keeping an eye on the overnight VPOC and NQ. Basically, the overnight lows 37.15 to 37.17, and then on the upside, the 21 to 25 zone being key. 20 to 22 key area in TF. If that breaks, then we could get some continued liquidation. On the downside, 10 to 08 to 10 is a good support zone. Expecting a response there on first test, but the selling does not have to shut off there. In order for 08 to 10 to be a support zone where it indicates that the selling is done, we would have to move back above 14 to 16.5. So if we go down to 08 to 10 in the S&P and then we bounce and go back above 14 to 16.5, that would indicate that the downside may be done. And even though we can get small pullbacks, at that point, the low could be in. But if we go to 1908 to 10, bounce just 2-3 points, and the momentum is still on the downside, and the internals are getting weaker, then we could go down to 03 to 05 before we get any decent buy response in the market. So right now, that's how the market is shaping up. Let's see how well the buyers are able to hold it at 14 to 16.5. Let's see if buyers step in the other markets as well, and we'll take it from there.